Hey y'all, we're Dustin and Danielle, a brother and sister certified financial planner professional duo at Toujours Planning. We're here to share what you need to know about money, wealth, and investing so you can start paving your own path to financial freedom and independence today. Today, we're talking about what's happening in the stock market right now and how this pandemic is affecting the stock market. And so this is one of a few of kind of mini series that we're doing to address what COVID-19 is doing to our economy in the stock market. So Dustin, let's talk a little bit about why we're seeing free falls and mostly free falls, let's be honest, and some
Yeah.
swings. What is causing that?
Well, first of all, this is something that no one on this planet has ever experienced before. This is something that may have happened many, many years ago in something like the Great Depression. It's that crazy. But even then, it was nothing like this. So I think that's why you're seeing these large jumps in the valuation of stocks. And if you think about it, it makes sense in a way because the value of a business, in this case, a certain stock, we'll talk a little bit more about the stock market and what it is, but the value of anything really is a psychological construct in a way of confidence of a value in the future. So with the business, it's, well, I'm confident that they're going to have these revenue streams in the future. That's why the business is worth this. If you think about that, that's kind of the value of anything, really. You pay for anything for something you may get in the future. So it is swinging because this is something we haven't seen before.
Yeah, it's based a lot on perceptions and confidence of the future, which kind of speaks to what's happening now. Is there's so many unknowns. Like you said, we have nobody in our lifetime has ever experienced anything like this. But we believe that once more information comes in, and once we get more knowns on whether good or bad, just more information, you'll start to see things probably stabilizing after that.
Yeah, that's right.
Right now, the unknowns are the main reason for these big swings. So talk to us a little bit about what the stock market is exactly, because I feel like we need some back to ground zero of what the stock market actually is made up of, what it means to people who don't necessarily understand what the stock market is or how it works. Bring us back to basics. What does the stock market mean?
Right, because a lot of people just don't really understand. And a stock, all it is a business or a share of a business. So just like if you own your own business, if you divide that up between 100 different pieces, that could be 100 shares of your business. So what the stock market is basically every major business in the world. Because once a business gets large enough, they usually go public and issue stock for lots of different reasons. So the stock market is the value of most of every large business in the world, valued to the second of every day. And that's a problem with it too, is because you can see it in real time every second of the day, because it's hard to judge what a big giant company is worth to the penny every second. And that's why you see a herd mentality in the stock market and its reactions. And I always like to tell people that the stock market isn't really rational. It's very emotional because you have millions and millions of people trying to value it every second of every day. And just like if you walked into a department store and everybody's running out screaming, you're not going to walk in there anyway. You're going to run the other way and ask questions later. And that's kind of what's happening in the stock market.
Unless you're our mother, in that case, you keep going to the chaos.
Yes.
True story.
But true story, unfortunately.
Yeah, that's a great analogy. Another thing we've been hearing a lot on the news is that we are in a bear market, and a bear market means that the market is down by 20%. So what does that mean, really? We know how it's caused, and then how do we decide when this goes into a recession?
So there's funny names. They call a bear market and a bull market. And I only found this out recently. They call it a bear market because a bear attacks down with its claws, so the market falling. And a bull market is attacked with their horns up. So they call a bull market that keeps going up. But a bear market technically is a 20% drop from its highest point, which we've already surpassed that. And really what that means is it's just a psychological threshold. And as I mentioned earlier with the herd mentality, there's lots of psychological thresholds in the stock market because it isn't rational. But does a bear market equal a recession? Not always. One other thing about the stock market is it usually precedes what's happening in the economy by about 3 to 6 months. So you'll usually see the stock market fall in anticipation of a recession. And if you remember what I said earlier, the stock market, the value of things is all about what the expectations are in the future. So if people think that revenues are going to get cut in the future because of the pandemic, well, many people will sell the stock. And in a way, that creates a self-fulfilling prophecy because then the market falls, then everybody thinks it, and that actually may put us in a recession a little bit later. It always comes a little bit later. And that's kind of what we're seeing right now. So a bear market, yes, is usually a good barometer that a recession's coming, but it's not always the case.
So what we need to do and what we're suggesting, of course, you would need to talk to your own financial advisor for specific advice on your own situation. But in general, we are advising to wait for the markets to stabilize. It looks like this is definitely going to get worse before the curve flattens. And remember, in order for the stock market to stabilize, we really need more information coming out from all of the unknowns that are happening right now.
Yeah, just to piggyback on that, because that's a great point, Danielle. Any information will kind of calm people, even if it's bad information, but we'll know how bad it may be, at least if we have that bad information. And I think that is what helps stabilize things.
It kind of is like when you're very ill or something was wrong with you and the doctors are trying to figure out what it was. And that's why some people say just getting the prognosis or diagnosing what is actually wrong with you brings some type of relief, even if it's not really what you want to hear. And that is kind of another good analogy to equate to what we're kind of waiting for.
Yeah, because if you have all these unknowns and nobody on this planet has ever experienced before, it's so easy to result to panic and worst case scenarios. So until then, you're going to see wild swings in the stock market. And remember, you're seeing the stock market swings. That doesn't mean that's the only thing swinging in value. Your personal business, if you own a business, your real estate, all of that is doing the same thing. It's just invisible to you. We don't have it on a 24-hour news network. And I want to make another point about why you shouldn't try to participate and sell or buy whenever things are this crazy is because it's like trying to sell your business or your house even right in the middle of a hurricane. So if you know the hurricane's coming, or even if there's a storm coming, it's not going to hit you. Everybody's leaving town. Why are you trying to sell your restaurant if it's happening? Because there's no buyers there. Everybody's scared for themselves. What you may find is the person that may want to buy it from you is trying to really take advantage of your panic and really try to lowball you. So just like your restaurant, if you plan on continuing with it in the future and continuing owning your business, why sell it now? It's the same thing with your long-term investments.
Great analogy. So to sum up, we really need to stay calm with our investments and don't take emotional decisions out of the equation and wait for more information, good or bad, to come in so we can start to make some better decisions. All right. If you like what you saw, subscribe to this channel and then head over to chooseyourplanning.com to listen to episodes of our podcast, Wealth by Design, and to download our free wealth blueprint. We'll see you in a couple weeks. Thanks.
Bye.
Bye.